traders, we're looking at the EURCAD now. I marked this up, so I want to explain something. You have to have a strategy, and I mean, I have a strategy, and it's looking for a trend. In this case, this is bullish, and we go for the retrace. So we're looking at higher low, higher high retrace buy, into equilibrium. At some stage, this is going to roll over and head in the opposite direction. Have a look how aggressive this was. So we've got a ton of traders bullish, massive amount of sell stops sitting under here. This trades down and it pulls all these traders with it, I should say. All these stops get taken out, and then big money buys up, of course, that's what they're doing, and then they do that, and then they unload up here. And look at this. So, this is the kind of thing that it's going to take you by surprise every now and again, and you want to be prepared, in other words, have your risk management under wraps. I'll always follow my strategy, and it's going to be more of the same. So here we have a bullish trend. We're trending up, and low, to high, retrace buy, low, high, retrace buy. Same thing, right? Let's just go down to a 1 hour chart now. Or before we do, what I will do is just go back out to a daily, and I'm going to mark up a couple of levels. So look, big money is invested long with this at the moment. And so we've got a strong euro, got a weak CAD. This lower high could be a little bit of a concern here. All right, so it's kind of lost a bit of momentum at this point. The euro's, still strong against the CAD right now, but higher time frame momentum is bullish on the daily, clearly. And I'm going to mark up a couple of levels here. So we've got these highs, level of interest. We've got this high here that coincides with these previous levels, and then of course that. Right, so with that marked up, I'll go down to the lower time frame. I'm looking for a buy opportunity with this, and I'm just going to diverge for a second here, guys. Okay, come back. Yeah, these are my levels. Now, if we go down to the 4H, cancel that. I'm following this now on the 4 hour time frame. We have these lows. Yeah, you could mark the low. Okay, under this red candle, we've got these lows down here. So these 2 points of interest. So what I'm looking for in a trend is the fact that the previous lows remain intact until they don't, right? So these lows here have held. That's held. And it hasn't been traded through this one here. So each one of these swing points have kind of held up. So I'm looking for continuation, assuming that this swing point here will hold. Swing low, swing high, retrace buy. Following my strategy, swing points, something like that. This is starting to pull back a little bit, and there's a few things about this that I want to talk about. It's going to be a little bit careful, because if we go down to, let's go down to a 15-minute, we've got the chart marked up now. We have levels. So we have potential targets. We have potential stop loss levels down in here that we could consider. So we're looking at these price swings on the higher time frame. So that would be where I'd be interested in placing a stop at the moment. We're getting a little bit of a pullback. Now here's the thing with this. Just bear with me for a minute. I've just got to do something. Done. Okay. I'm always looking at these price swings, and mainly this low to high here on the 15M. And I want to see a pullback into the 50% on my fib, this level here, this red line. That's my bottom line. It's kind of moved into it and then bounced off. But I would really want to see this kind of pull right back down into this level here for an entry point. So there's a possible buy down in here if it continues down. Stop loss, I'm going to go with, most likely, if that's a buy, stop under these lows at least. Understand the risk, guys. Can it get taken out? Absolutely it can. Look, there's a 2.5R target right there. If we look at, these highs here would be worth considering. All right, so there's a target. I'm talking about this range now, the stops that are resting up in here. If this is bullish, I'm always going to be looking at these price ranges. Okay, so we've got this high down to this low. This is the range, this is the trading range at the moment. Right, now I'm looking for the high of the trading range for my target. That's it. So that's the plan with this. Can it roll over and go the other way? Yeah, absolutely it can. Out of nowhere, that could happen. Right. So you want to manage your risk accordingly. Just stick with a trading plan. Then this is it. This is a plan. And part of that plan is trading with consistent, conservative position sizes. All right, so just be careful, guys. It's a really precarious market, and it can turn on you, as I mentioned, at any time. So what I'm looking for here is, even if we go down to, no, we'll stick to the 15. Now, we have a time period, and I'm going to run with midnight New York. That's the open of the trading day, not the New York Open, any other open, right? This is this is when the trading day kicks off. It's midnight, and I have my chart set to New York time. So let's just go down to New York midnight, right? There, it's 00 or triple. It's 0000 on the thing. Come down here and you can set your time zone. Okay, I'm just running off New York time on my chart for everything that I do so that it's easy to follow. Close of the day, we're looking at 0. Okay, so we've got 5. There's going to be times of the day where you want to get involved with the market and times of the day when you want to look to exit. And what I'm looking at here is, let's just draw a candle. Just get rid of this. If this is a bullish trend, if it continues bullish, here's something to consider. Right, there's a bullish candle. We've got a wick above and a wick below. Right, there's a daily bullish candle. The market opens, so here at midnight, the market opened right there. Let's just mark that up. We'll do that. It opens at midnight. New York midnight open price. That'll do. What I really want to see in a bullish trend, I'm looking for this, guys. I'm looking for market opens. That's the open. So have a look at this candle. Open, the low of the day, the high of the day, and the close. Okay. Open, low, high, close. Back over here, open. I'm not 100% convinced that this tiny little move here is the low, because this is a stop run. This is where they take out sell stops that enable big money then to pair their orders for a bullish candle. So this little move here hasn't really convinced me. I mean, this has traded down here, but yeah, today I was thinking we could see a bit more downside with that. In any case, it hasn't happened yet. We've had a bit of a move down, and now we're seeing it trade north, and then we want to see it reach a high and then retrace for the close. So this area here hasn't really inspired me a lot at the moment. All right, I don't trust it. So you want to probably look to enter the market somewhere around this the opening, the New York midnight opening time. And then I'm looking for a stop loss. I'm going to be a little bit generous with this, just in case they decide they want to pull it down and take out these sell stops sitting under here, and then it moves. So we don't know how it's going to shape up, right? So I'm inclined to pull my stop loss down under this low here, something like that. All right, these lows. Okay, stop loss slightly under. Can this get taken out? Can this turn around and trade south? Absolutely it can, right? But you have to have a trading plan that is proven. I mean, and this is it. I mean, this is what I do every day. I trade for a living, and this is my strategy basically. Some get taken out, and so be it. But overall, I mean, I make money, and my accounts are profitable every month. So you have a losing day or a, heaven forbid, a losing week every now and again. It's going to happen. So you need to factor in the risk and trade accordingly. The biggest mistake you'll ever make is going in here with crazy odd lot sizes, adding to your position. If it's running away on you, moving a stop away, don't do stuff like that. Stop loss only goes with the trade. The only direction I'll move the stop loss is in this direction. You never take the stop loss away. Just never do it. Risk, I'm going in pretty conservatively at the moment. Set up your risk. I'm going in at 0.15% risk on every trade at the moment. And because of the volatility, just taking it easy, guys. Just slow and steady until the dust settles after this Bank of Japan thing. I'm bullish with this at the moment. That's my idea on this. Now, the time to get involved with this is generally just prior to the London Open and into the Asia close. That's really the best time to get involved. I've actually got a markup for that. It's there we go. Look, something like that. I'll show you this. In fact. It's a entry 2 a.m. to 5 a.m. So if we pick up to, that's just an hour before the London Open. There's 2 a.m. New York, and we're going to run this through to 5. All right, 5 a.m. So that's the Asia close. So this is the time that I'm looking to get involved in the market. And you know, we're trading through this at the moment, so I'm looking for the opportunity. Hopefully this is going to set up the low of the day. Hopefully, right? It could be the high of the day, guys. Look, see, there's a high here, right? Understand that that could be it, and that, you know, that could be the high of the day, and that tanks. That's absolutely you know, that's definitely a possibility. You know, they could take it against you Monday. So just trade with caution. Now I'm looking for a day trade, and I want to close this hopefully before the end of the day. Consider this candle here. At some stage this will peak. You know, if it runs bullish, okay, it's going to hit the high and then it'll come back and close, usually something like that. So, you know, before the end of midnight, in through the New York session, we'll look to close this. There's a time for that. I won't go into it now, but watch this. If it runs through the New York bullish, look for this kind of price action. If it does that, right? If it trades in our favor and the New York opens bullish, look for where it rolls over, all right? And we start to see lower highs and lower lows, and that would be a cue to exit. All right? So we're looking at the high of the day here and here, right? And that's the close, something like that. Okay, there's your close there, and the high of the day. You know, so look for this price action before the before midnight, before the close of the New York market. So anyway, look, that's my take on the EURCAD at the moment, with a few ideas, and I've explained all this for the benefit of beginner traders who may be struggling to understand some concepts. I'm trying to simplify this as best as possible, and yeah, I mean, they're not my ideas. You know, I'm sharing ideas from one of my mentors, and with that, I'd love to hear your thoughts on this, guys. Leave a comment, and I hope you have a great day, safe trading, and we'll see you in the next one.